Hello and welcome to the FOMC preview for their September rate decision, where alongside the rate decision there'll also be a summary of economic projections released from the FOMC and 30 minutes following the decision, a press conference from Fed Chairman Bernanke. So this is the rate decision where the FOMC are expected to taper their $85 billion per month in asset purchases, which currently comprise of $45 billion in treasuries and $40 billion in mortgage-backed securities. How the Fed begins to taper is another question, with at the moment no consensus on whether they will trim down their treasury purchases, their mortgage-backed security purchases, or a mixture of both in the expected $10 to $15 billion taper. If the FOMC do decide to taper, then they could strengthen their forward guidance by lowering the unemployment threshold regarding a rate hike. So this idea has been touted to try and calm markets if they do taper, by lowering the unemployment threshold from 6.5%, which it currently is. However, Fed Chairman Bernanke has often said that this threshold is not a trigger, which does weigh against this argument. So to argue against the tapering, the FOMC have often said that they are data dependent, and data out of the US has been mixed recently, with the most recent non-farm payrolls report coming in lower than expectations and the previous month revised lower. Another thing that's ongoing in the US is the current fiscal situation, with Congress not being able to agree on the sequestration which is looming as the fiscal year does end on the 30th of September 2013. Furthermore, arguments against the tapering include the ongoing geopolitical situation in Syria, although this has died down somewhat, and the volatility we have seen in emerging markets as Fed tapering does begin to be priced in. So market reactions then. If the FOMC do decide to taper and are on the more hawkish side, then we could see a knee-jerk reaction lower in equity markets, treasury yields move higher and gold also moving lower, with the dollar strengthening, which has been seen as Bernanke did testify and prepared the market for tapering this year. However, on the flip side, if they decide to not taper, which would be highly unexpected, we would see significant weakness come through the dollar expected, as well as equity markets move higher and treasuries also move higher. However, it is worth noting that equity markets in the US are currently trading around their all-time highs, so any scope for upside could be limited. On the other hand, if the FOMC did lower their forward guidance threshold, this would push back expectations of a rate hike, which could see euro-dollar volatility, particularly in the red and green contracts, as current price action is for the first rate hike in Q4 of 2014. Another argument against the tapering, that would be coming with the economic projections, where the FOMC are expected to lower their growth forecast for 2013, and they could mention that as sequestration does loom, this would weigh on growth. A side note with the economic projections is that this is also expected to increase to 2016, where current FOMC projections only go up to 2015. And a further side note is during the press conference, Fed Chairman Bernanke may be asked on his successor. So we did see earlier this week that Larry Summers, former Treasury Secretary, did pull out of the running, as he said it will be acrimonious if he is nominated for Fed Chairman, with Yellen now firm favourite for the role. So Yellen is expected to get the role, and Yellen does have a dovish stance on the FOMC and is likely to continue the policy of Fed Chairman Bernanke. So just to recap the main point, the FOMC are expected to begin tapering of around $10 to $15 billion, and if they do, then Bernanke will look to calm markets, and that could either be by lowering the unemployment threshold for a rate hike and reiterating that tapering does not mean tightening and that monetary policy will remain accommodative for the foreseeable future. So I'd like to thank you very much for watching, and I hope you have a successful trade with the FOMC.